Good day, students. Today we're going to do a cash budget question. Okay, what I did say, cash budget, certain things you need to remember, only cash. So any non-cash items, you need to take it out of the budget. So it doesn't mean because it's a cash budget question, we can't put non-cash items in it. That is basically just to test that you know if it's a non-cash item, you need to remove it, right? Stuff like depreciation and credit losses or bad debts, right? Okay, so now let's start with the question. Point one, step one, go to the required, because the required is going to tell you what it is that we want from you, right? So the required said, prepare a cash budget for October, November, and December 2017, together with the debtors and creditors schedule. So they basically want you to prepare it for 3 months, and the debtors and the creditors schedule is basically just calculations. Now, when we talk about the calculation is, for example, if you go and buy something on credit, let's say you go and you buy 6,000 Rand worth of clothing on credit. When you get to the counter, the lady will normally ask you 6 or 12 months. Now, the calculation, basically, that's what we're going to do. We take one amount and then we divide it into the certain amounts of repayments. For example, if you have sales, you normally have sales, then you'll say, okay, you can pay it over 3 months, you can pay it over 4 months, and the same with purchases. Now, these are the calculations. But I'll show you how to do the calculation. So we already know they're asking us for 3 months. So we can ask you for 2 months, we can ask you for 4 months, we can even ask you for 6 months. We can even ask you for 1 month, right? So by them telling you for 3 months means you need to have 3 columns. You need to have a column for each month, and you need to have a description column. Right, so we're going to start and we're going to make our columns, right? So we know it's for 3 months plus the description column. So let's just make our columns here. 1, 2, 3, and then you have your description. So the requirements that they said, we need October, November, and December. Okay. Sorry, then the question says, the management of VAR Limited has asked you to prepare a cash budget, right, for 3 months, October, November, and December. The following information is available, right? So remember I told you when you did the statement of financial position, what is important? You need to know the elements, right? Now, the formula or the framework for our cash budget, let me just show you here. The framework for our cash budget is always opening balance plus cash receipts. Now, the cash receipts is all your inflow, meaning money that flows into your company, or we can call it income, or we can call it all your receipts, right, is equal to, so your opening balance plus your cash receipts is equal to your total cash receipts or available, and then we say less cash payments, which under your cash payments, we can call everything that flows out of your business. And when we talk about everything, we're talking about money, right? Or expenses or payments. Now, these are the things you're going to look for to identify, and this equals to my closing balance. Now, remember, the closing balance of 1 month is always your opening balance of the next month. Okay, so this is our framework, and now we're going to look for all our receipts or inflows and all our payments or expenses or outflows, right? So cash sales, we know that when we sell, it's an inflow. Money flows into our account. Credit sales is also an inflow. When we sell on credit, eventually money flows into our account. Purchases is an outflow because when you buy stuff, you need to pay, meaning money goes out of your account. Depreciation is non-cash, so I'm just going to do that, right? Salaries and wages is a payment, so this is an outflow. So because when you pay salaries and wages, money goes out of your business. General expenses is also an outflow. Money also flows out of your business. Then we're going to go to the additional information. Now it says credit sales are collected as follows, meaning that, for example, in August, you sold 600,000. This is how you're going to collect the 600,000. You're going to collect 50% during the month of sale. During means everything you sold in August, you need to pay 50%, they need to pay you in August. That's during. 20% of the 600,000 is during the month following the sale. So everything that you sold in August, 20% you must receive in September, the month following. 10% during the second month, so that will be October. Then it says the balance is written off as bad debts. You need to remember bad debts is non-cash, so we don't account for that. But then the question says 5% discount on sales received within the month of sale. So this 5% is for this month. The 50%, the month that you sell it, if you pay in the same month, you can get a 5% discount. That's what they're telling you. Now, I want to explain something to you. If I buy something from you for 100 Rand and I pay you 100 Rand, I've paid you 100% of the price, right? So I bought something for 100 Rand and I pay you 100 Rand, it means I bought 100% of the price, right? But if I tell you I'm going to give you 5% discount, that means is that you must not pay me 100 Rand, because if you pay me 100 Rand, you're going to pay me 100%. You must pay me 95 Rand, because 95 Rand represents 95% with the 5% discount, right? So basically what I'm saying is, for example, so the 50% that you need to calculate. Okay, let me show, we'll first do the calculation, but let's get back to that. Let's first run through our question and then we'll get back to the calculation, right? So this is a calculation. Number 2 says purchases are paid 70% in the month following. So everything you buy, you purchase in August, you must pay 70% in September, right? And then it says that of transaction, and the rest represents cash purchases. Now remember, a cash purchase always happens immediately. So that means 30% is cash. So 30% that you buy in August, you must pay in August, right? Number 3 says, an old equipment will be sold for 100,000 in the month of December. Now, when you sell the old equipment, what happens to money? Money comes into your business. So this one is an inflow. And when does this money come in? Only in December. Number 4 says a payment. As soon as you have a payment, you must know money will go out of your account of 10,000. Interest is due and payable on the 30th of November. So this is an outflow, but only on the 30th of November. 5 says on the 31st of December, a dividend of 25,000 is payable. It's not paid, right? So if something is payable, it hasn't left the business yet. So basically, this one, we're going to ignore. Right? Oh, it says only on the 31st of December, right? So meaning, because we're doing it, so we can actually, if it was October, then we don't do it. But because it's in December, we can add it for December, because December is still coming. So that will be an outflow. Advertising of 1,500 per month. Payment, so it's an outflow, but it will be every month. Water and electricity as an expense, charges are 18,000 per month, an outflow, and you will also pay it every month. Then they say there's a closing balance, right, of 30 September of 150,000. Now remember, a closing balance of 1 month is always an opening balance of the next month, right? So a closing balance of September will be our opening balance of October. Okay, now we can give you a question whereby we'll say depreciation is included in general expenses. Then if it's included in general expenses, you need to know you must deduct it. But because depreciation is on its own, we're basically just going to ignore it, right? So now we can start with our answer, right? So now we're going to do our description. Remember, what is our framework? Opening balance. Then we have our plus our cash receipts. And then we're going to add all our cash receipts or our inflows. Now, can you see we've only got cash sales, credit sales, and equipment sold, right? So we're going to put it here. So we're going to say cash sales, credit sales. Now, remember, credit sales is always a calculation, because you don't pay everything in 1 month, and we've got equipment sold. Okay, so there's no other income. I draw a line here. And I draw a line here. Everything in this box, I'm going to write my answer there, okay? Then I continue is equal to total cash receipts or available minus my cash payments. With cash payments, I immediately put a bracket in every column, because I need to know I must minus, deduct the amount. Okay, then I go to my question. Okay, I've accounted for cash sales, right? I've accounted for credit sales. This is now with my description. Then I must have purchases. Now remember, purchases is cash purchases and credit purchases. So I write it here, cash purchases. Credit purchases, remember, credit purchases is also a calculation. Cash, credit sales and credit purchases is always a calculation, right? Then we have, so we've done the purchases, we've got salaries and wages, we've got general expenses. Expenses. Okay, so we've accounted for that and that. Now we've got old equipment, we've accounted for that already. So we've got interest payable, we've got dividend, we've got advertising, we've got water and electricity, right? So we just put it in our description. Interest payable, dividend, advertising, water, and electricity. Okay, so we've accounted for this, and this on our answer sheet. Now we're just going to take the amounts, right? So then we know is equal to our closing balance. And remember, closing balance of 1 month is always your opening balance of the next month. And now you basically just take everything on your question and you jot it down on your answer sheet. Right, okay. So we're going to do the calculation last. So we're going to fill in everything else besides the calculation. So we've got opening balance. Remember, they told us it's 150,000. Okay. Then we've got cash sales. There we've got a column for cash sales. But remember, they only want October, November, and December. So we're going to use the amounts for October, November, and December. So cash sales is 700, 900, and 900. So it's 700,000, 900,000, and 900,000. Okay, so we're done with that. And then we've got credit sales. Okay, that's a calculation. Then they tell us old equipment will be sold for 100,000 in the month of December. So in December, you're going to get 100,000. Why? Because you're going to sell the equipment, money is going to come in. You're going to get nothing in November and nothing in October. Okay, so we're done with that. Now we're going to go to our purchases. Purchases said our cash purchases is 30%, right? So we're going to take the amount and we're going to add 30% of the amount every month. Okay. So our purchases for October is 620 times 30%, 186,000. We do exactly the same at 650 times 30%, 195,000, November. And then you do exactly the same thing with December. December is 550,000 times 30% is 165,000. Okay, so we are done with our cash sales. Credit sales, we're going to get back to it because it's a calculation. Now we've got our salaries and wages. Salaries and wages, October it's 90, November 100, and December 140. So it's 90, 100, 140. Okay. General expenses, October 35, November 30, and 25 December. General expenses, 35, 30, 25. Okay, then we go, we're done with the table, right? Now we're going to go down to our additional information. This is a calculation, 2 is a calculation. We're done with number 3. I've accounted for number 3. Now, payment of the 10,000 interest. Now remember, it's only November. So October, there's nothing. November is 10,000. And December, there's nothing. Right, so I'm done with number 4. Number 5 says the 31st of December, there's a dividend of 25,000, right? So there's nothing in October, nothing in November, but 25 in December. So I'm done with that one. The advertising is 15,000 per month, so that means 15,000 every month for the 3 months. Okay, water and electricity charges 18,000 per month, so you must have 18,000 every month for the 3 months. And now we're going to do our calculation. Okay, so now our calculation, you take the number of months you have, 1, 2, 3, 4, 5. You must have 6 columns, right? Now you need a column for every month. Okay, so let's do this. Okay, so it's August, September, October, November, December. Okay, so I'm going to do this. This is called my debtors schedule. Okay. So the number of months that they give you, you write down here and you write it across, right? So it's August, September, October, November, December. Now, can you see the difference is you're writing all the months that they give you, not only the 3 that they want, right? Because some of August's payment will happen in the other months, right? So here you have August, September, October, November, December, and then you have a total column. Okay, and this is going to be my creditor's schedule. Same story, August, September, October, November, December. Yeah, I'm just going to write it smaller, August, September, October, November, December, and total. Now this calculation, please show it in the test. You can score a lot of marks here. Okay, so we're going to start with the first one. And then we're going to take what is our amount, our credit sales in August, right? In August it's 600, September 500, October 400, and then it's 600 and 700, right? So it is 600, 500, 400, 600, 700. And you're going to repeat this every time, right? Now, what does the question say? The question says 50% during the month of sale. So everything you sold in August, 50% will be paid in August. Everything you sold in September, 50% will be paid in September, right? But let me do the whole of August. But remember, August is going to give you a 5% discount. Now, we only interested in these 3 months. But because our calculation will be affected by the other months, let me show you. So in August, they say 50% during the month of sale, 20% during the month following sale. So 20% of everything that you sold in August must be paid in September. Okay, and then it says 10% during the second month following. So everything you sold in August, right, 1, 2, this will be the 10% that you need to pay. Now, can you see? Of August's sales, it is already in the columns that we need it to be. That's why we do this calculation, right? So then we can do this with all the others. Everything you buy in September, 50% you must pay in September. Everything you buy in September, 20% you must pay in October, and then 10% in November. October, everything you sell in October, 50% you must you must receive in October, 20% in November, 10% in December. November, 50% in November, 20% in December, December 50% in December, right? So now we're going to do the calculations. Now the first calculation that we are going to do, okay, will be, let's first do all the other calculations. Okay, let's do this. Now remember, I told you that if I buy something from you for 100 Rand, and you pay me 100 Rand, you've paid me 100% of the price. Now with this, they're saying that you're going to get a 5% discount. So it means if you pay the full amount, you're going to pay 100%. But if you get a 5% discount, you must actually only pay me 95%. So this is what we're going to do. We're going to take the amount, right? We're going to multiply it by 0.95, that is 95%, and we're going to multiply it by 0.50, that basically represents the 50%, right? So we're going to have, now can you see, the 50%, we don't need to do August. We don't need to do September. We can only do October, November, and December, right? So we're going to say October. What's the total amount for October in our credit sales? 400. So we're going to take the 400, multiply by 0.95, multiply by 0.50, will give you the total amount they should pay you in October. November, we do exactly the same thing. 600, we're going to say 600, multiply by 0.95, multiply by 0.50, will give you an amount. And then December, it is 700. So we're going to say 700, multiply by 0.95, multiply by 0.50. That will give us our answer that they should pay. Let's just do the calculation. So it's 400 times 95 gives you 380 times 50. So they should pay you 190 in October. Then we're going to go to 600. You do exactly the same, times 95 times 50, 285. And then you do it with the 700 as well. Times 95 times 50 gives you 332,500. Now I take these amounts and I go and write them here. So here is 190 for October, that's 190. For November it's 285. And for December it is 332,500. 332,500. Right? And then we just basically calculate what our, now this I don't have to calculate, this I don't have to calculate. So then I take 600 times 10%, because 10% of August's amount I must still pay in October. So then I just say 600 times 10% gives me 60,000. Then I go to the next one, 500 times 20%, and then 500 times 10%. 20% is 100. 10% is 50. Okay, then I go to October, 400 times 20, and then times 10%. You see, so my table is now going to tell me what I need to calculate next. 40,000. And then I go to November. November, 20% of 600 gives me 120. Right? So I filled in all my amounts, and I'm going to add it up vertically. So it's 60,000. Plus 100,000 plus 190 gives me 350. 50,000 plus 80,000 plus 285 gives me 415,000. And then it's 40,000 plus 120,000 plus 120,000 plus 332,500 gives me 492,500. Okay, then I take my amounts and then I take it up to my cash budget, right? First one is 350. I just bring it up from my table. The second one is 415. And the third one is 492,500. Okay, so I'm done with that. Let me do my second calculation. My calculation, August, what's my purchases? Purchases, August is 400, 600, 620, sorry, 400 in August, 600 in September, 620 in October, 650 in November, 550 in December. So I'm just going to write it here. So it's 400,000, 600, 620, 650, and 550. Okay, now we go look to our instruction. The instruction says purchases are paid 70% in the month following. So all my purchases in August must be paid in September, right? So I don't have to do that one. All my 70% of my purchases that I purchased in September, 70% must be paid in October. So yeah, I have my 70%. I can somehow work it out. So I'm going to say 600 times 70% gives me 420. October, 70% of my 620 must be paid in November. So I say 620 times 70%, which gives me 434,000. November, my 650 times 70% must be paid in December. So it is 455. Okay, some of you might want to know what happens to December. 70% must be paid in January, but because that's not part of our requirement, we don't worry about that. So I bring down my amounts for 20, 34, and 455,000, and then I take it up to my cash budget. So credit purchases, it's 420, 434, and 455. Okay, now I'm basically almost done. Now I'm just going to add up my cash budget. Let me fold this page because we're not going to need the calculation anymore, so that we just concentrate on what we need to do. And this is what we need to do. Okay, so now we're going to say, we're going to add up everything in this block, right? So we're going to add up the 700 plus the 350 gives us, and then we're going to write the answer there. So it's going to be 1050,123. We're going to do the same with the November block. 900 plus 415,000 gives us 1315,123. We do exactly the same thing with December. 900 plus 492 to 500 plus 100,000 gives us 14925123, right? Then we're going to do exactly the same thing with our payments. We're going to add up everything in the block, everything in this block, and then we're going to write the answer here. So everything that you've added up in October, you'll write the answer in the October column. So we're going to say 186,000 plus 420,000 plus 90,000 plus 35,000 plus 15,000 plus 18,000 gives us 764,000. I'm going to do exactly the same thing like with November. 195,000 plus 434,000 plus 100,000 plus 30,000 plus 10,000 plus 15,000 plus 18,000 gives me 802,123, and then I do exactly the same thing with December. 165,000 plus 455,000 plus 140,000 plus 25,000 plus 25,000 plus 15,000 plus 18,000 gives me 843,123. And now I'm just going to follow my framework, right? I'm going to say opening balance plus cash receipts gives me my total receipts. So my opening balance is 150. Let's put it there, 150 plus my 1050 equals to 1200. My total cash receipts minus my cash payments, 764, is equal to 436. Closing balance for 1 month is always opening balance for the next month, 436. And then you add 436 plus 1,315,000 is equal to 1751 minus 802 gives me 949. Closing balance for 1 month is always my opening balance for my next month plus my cash receipts. Let me just make sure. I think that's 1 0 too many. Yeah. Okay. So it's 949 plus 4925 is equal to 244,1500 minus my total payments, 843. 1598 500. Bob's your uncle. You are done with your cash budget. Okay, please go through the videos. I will load this question on Votella. Thank you so much.